Welcome to Making Money. This is Matt McCall. Thanks for joining me. We got a big show coming up, a first-time guest, Chris Mayer. You may have heard of him. He's been in the business a while. He wrote a book that I think is one of the top books for an individual investor to read called 100 Baggers. And a lot of times people hear 100 Baggers and think that's a myth. It can't happen. But we're going to talk throughout the show about examples of how it did happen, stocks that you could have bought along the way. And I'll tell you, folks, there's 100 Baggers out there right now. We're going to also talk about the area of the world, Scandinavia, believe it or not, where Chris is the most bullish right now. And he'll talk some of his stock ideas that he has in his portfolio. All that and more coming up right now on Making Money. Over 1 million people around the world follow Wall Street veteran Mark Chaikin for his shockingly accurate stock market predictions. He just gave them a dire warning. Mark says, we're about to witness an historic stock market shakeup that can soon create devastating losses for investors who don't know what's coming. And as a result, you only have 90 days to move your money. You see, Mark spent 50 years on Wall Street at some of the most prestigious hedge funds in history. And he's been on Fox Business and CNBC countless times. But this is a financial story no one else is telling. And if you let this take you by surprise, you could be in for a world of pain. He explains everything in a brand new free report available at rollingcrash2023.com. He includes a name and ticker of a popular stock that could be directly impacted by what's happening as well. Mark warned of the beloved pet brand Chewy before it fell 45%. Tech company C Limited before it fell 66%. Furniture company Wayfair before it fell 76%. Social media favorite Snap before it fell 36%. And food delivery company DoorDash before it fell 65%. Mark even called the Amazon crash before the FANG stock fell 35%. So you'll want to avoid the stock in this new report immediately. Again, simply go to rollingcrash2023.com for your free copy of this new report. So let's bring him on the show right now. Chris Mayer, thank you so much for coming on. People who watch this show, Chris, know your name because I've talked about your book and referenced it many times over the last couple of years. And the book I'm referring to is 100 Baggers. And first of all, thanks for coming on the show.
Yeah, thanks for having me on, Matt. Good to meet you. Good to be on.
Yeah, thank you so much. We have things in common and people in common that we've never met in person, but it's funny how small the world is. Mm-hmm. I'm at a place in a country many people have not been to, staring at the ocean right now, and you've been here many times, and I have a lot of ties to this place as well. But the title of the book, when I see it, 100 Baggers, it's something to me that I perk up. I love it because I believe in that, and it's reality. But, in a business that you were in the past, doing newsletters, now managing money, when you tell people that, do you get kind of like this, oh, this guy's trying to sell me a bag of, goods here? Like when you hear that 100 bagger, do you get that?
Yeah, there's definitely some resistance. People think it's, unfathomable, a big number. But yeah, that's kind of the point of the book is there's study of all these stocks that returned at least 100 to 1. And there are a lot of them, and might as well shoot big. The best performers in the market are that way. So it's you definitely can have them. And one of the things I wanted to do in the book was gather a lot of anecdotes of just regular people who had these 100 baggers. And there are a lot more that I didn't include in the book, and I still get stories today. So it definitely is something you can do. It's just it seems like it's huge goal, but it's doable.
You talk about in the book how you mentioned early on how you're going to use stories to get kind of your point across, which I thought was great because, you and I can sit here and tell people from a more educational way of how to do things. But when you actually relate it to true stories, it actually kind of starts to sink in a little bit. And I thought that was great how you use that.
Yeah, I think so. And that works for me too. I mean, I think it's just a human thing. People learn more and remember more when it's a story that they can relate to. So rather than abstract cold numbers, and there's some of that in the book. I mean, I do say that the 100 bagger issue is really a math problem. If you compound it 20 to 25% a year for 20, 25 years, you're going to get your 100 bagger.
Yep. So when it comes to a 100 bagger, there's a couple of things, you have to be able to kind of go through the ups and downs, right? Because no stock goes straight up. You're going to have, bear markets on that stock. There might be many stocks, that pull back 50% once or twice along that history of becoming a 100 bagger. How do you, as a money manager, or how do you explain to people, how do you know if it's the end of the game for that stock or it's just a 50% pullback because the market's pulling back? How do you kind of live through that?
Yeah, I mean, this is like the big question. Right? It's not only do you got to handle the ups and downs, but you got to handle the long stretches of boredom too. Sometimes stocks go nowhere for years, right in the middle of a 100-bagger run. I think it was Berkshire Hathaway had a 7-year stretch when it went nowhere, and
Wow.
this was the best performing stock in the study. So sometimes it tries your patience as well as your gut. But to answer your question specifically, I'd say it comes down to your research at the beginning, how well you know the company. You know, if you have a really high bar for the kinds of things that you'll own, and this has to have to be high quality businesses, and maybe we can talk a little bit about what that means, but something you can hold for a very long period of time, and you know it well. So hopefully when you are tested and the market tests you on these drawdowns and difficult periods, you know the business well enough to know that it's going to survive, it's going to still prosper, and brighter days are ahead, and you don't run out and sell it.
So speaking of selling, what would trigger you to sell a stock? Say you went into it, obviously long-term hold. What is that trigger that would force you to sell?
Yeah, I always say selling is the most difficult thing in investing. It's very hard because your default, especially with this approach, is you want to give the company a leash. You know, companies do make mistakes. There are setbacks along the way. But I think there's a few things that definitely cause me to sell. One is if the competitive position of the company is somehow compromised. If something comes along and you realize that you no longer have the best competitor, and there's a possibility that that somebody's going to eat into that market share, and that's a good reason to sell. If there's something unethical that goes on, you've made your assessment of the management team is off or something from the beginning, and they've done something that's anti-shareholder friendly, and you don't like it. That would be a good reason. So generally, I mean, to speak more generally about it, you're looking for something that sort of breaks your thesis, as we say. So you have a reason why you bought a stock. You have all these, reasons, and something happens where it's no longer true. Those would be good times to sell.
Yeah, that's similar to my approach. It's you lay out your thesis when you buy it, and if that thesis changes at any point, whether it's up, down, or sideways, that's when you sell. Not about where it's at, the stock itself.
Right.
And you look at a company like NVIDIA. I've loved NVIDIA for many years, and obviously it's been kind of the darling this year with the big AI boom. And when you see it run up, hits $1 trillion valuation, still up there now, but there's a natural, it could pull back the next 6 months because it's gone up so fast, right? But I think it's tough to tell the individual investor that it's still a great company, but it's going to pull back. It's tough to kind of get that across.
Yeah, because people think they can avoid it, right? They want to come out now, and then they want to get back in after it falls. But that's very, very hard to get right. I mean, you might get it right one time, but then to consistently get that right time over time, and it's the odds are very much against you. Better off just riding that horse.
Yeah, I've found, Chris, in my foray of doing this for 25 years, the only time that I've done that is it never works well, because what happens is I may sell it, but I end up buying it back higher. You get this pullback and it goes right back up. And so net, I would have just been better off holding the darn thing, but end up buying it back.
Yeah, my experience has been very much the same that, you might get the sale right and you might look very smart for a while. It might be even a year. You look good, but eventually you look back 4 or 5 years later and you're like, should have just held
Exactly. So tell me a little bit, you talk about quality companies. What do you look for when you're trying to find a long-term hold that potentially could turn into a 100-bagger?
Yeah, I spent a lot of time studying the business, and it has to be a business that generates, I say, like high returns on capital. So I know that's sort of vague, but the idea is, there's return on equity, there's return on assets, there's return on invested capital. There's a lot of metrics you can use to sort of gauge that. But you want a business that's generating high return on every dollar it invests, and then you want that business to be able to take whatever profits it has, reinvest it, and earn those high returns, and keep doing it again and again. That's really where you get that effect of compounding over a long period of time that is crucial to being a 100-bagger. So that's number one. And then you spend a lot of time thinking about competition, because companies that earn high returns on capital attract competitors, and so that's where it comes in, the moat, and how what is the source of that competitive advantage? Why are they able to earn those high returns? And so really understanding what that is and the durability of that, those two things are really critical. That's like the number one thing, I would say.
So when you're looking for a potential 100 bagger, obviously if you're buying Apple, which this week hit $3 trillion, it'd have to be, a $300 trillion company, which probably is not happening in our lifetime.
Probably not.
Yeah.
Right.
So are you looking specifically to smaller companies, or do you diversify across all asset classes?
Yeah, I think you favor the smaller companies. Definitely want to do that. And for the obvious reasons, like you say, I mean, you're not going to get a 100 bagger at Apple at this point.
Yeah.
But I wouldn't be too dogmatic about it. I mean, if you focus on the underlying engines and you find a business that checks all your boxes, is compounding at 20, 25%, and it's a $10 billion or $20 billion market cap, I wouldn't let that dissuade you, because you just never know. I mean, there was a time when Apple was $20 billion market cap.
Yeah.
And it was inconceivable to imagine. I mean, I remember thinking it was inconceivable to even hit $1 trillion.
Yeah.
I would focus more on the engine than the market cap, but definitely want to favor the smaller companies.
So you mentioned in the book, you talk about the media, and you talk about the media as the blame for the increased trading activity. So I'll tell you a quick story. I was a co-host on Fox Business for many, many years, and over 1,500 TV appearances. And I was in that machine. I like to think I wasn't the bad part of the machine. But today, I can't turn on Fox Business or CNBC for more than 2 minutes without screaming at the television because just the nonsense that goes on there is crazy. One day they're extremely bullish when it's all green on the screen. It's red the next day, and they're bearish. And I'm not going to mention somebody's name, but the kind of goofy figurehead of CNBC is just ridiculous from day to day. Tell me a little bit how, what your view is on that and how that kind of hurts investors, really.
I think it does. I mean, I think, a lot of what goes on social media is also hurts investors. Just any sort of news, anything because what it's trying to make you do is trying to make you seem like something important is happening every day, and that somehow you need to react to it and do something. And I mean, vast majority of that stuff is just noise. So, I mean, I don't even read, even the Wall Street Journal, the Financial Times. I don't read any of those newspapers on a daily basis. Now, of course, sometimes some article will float around that I'll read, but most of the time I'm reading, things put out by companies. I'm reading, industry publications, talking to other investors, talking to companies, and all that sort of helps lengthen your time horizon. You really have to, it's almost like putting yourself on some kind of diet. Like, you don't go and allow yourself to just eat a bunch of junk food every day. You put limits, right? So it's the same with this. You have to kind of manage it and limit your exposure to that.
Yeah, it's amazing that, it's entertainment, right? Because most days the market's up or down. It's
Nobody
just
knows
because
why.
There's more buyers or sellers. Yeah, it doesn't matter, right? It doesn't. There's no true reason why it's moving. And I had a guest on last week, and very similar view to you, long-term view, and myself. And it's like, what the Fed's doing doesn't matter in the long term. In 5 years from now, we're worried about the next Fed meeting, and are they going to raise rates again? But it doesn't really matter. It shouldn't affect a great company if you own it.
Right. And if you start thinking about things in terms of 10-year time horizons, then you start thinking, well, 6, 7, 8, 9, 10 years from now, am I going to look back at this Fed meeting and there was some sort of critical thing? Unlikely. Very, very unlikely.
Yes.
So a lot of this stuff just starts to bleed out. And a lot of times I think of it, I'll say, well, if I own a company, I'm going to own it for 10 years or 20 years, I'm probably going to see several different rate cycles, right? You're going to see them come up, you're going to see them come down, you're going to see them come up again. You're going to see more than one recession. So you have to just sort of know this is part of the territory. And,
kind of speaking of now the Fed and where we're at today and where we're going, you talk about in a book that there's always kind of reasons to sell stocks. And I remember when in my early 20s, so many, many, many years ago, speaking to a gentleman on Wall Street, an older guy, and he pulled me aside. He's like, listen, I can give you 10 reasons today why you should not buy one stock out of the market. And he's like, but I could have told you that for the last 60 years, every single day.
Every day. Yep.
Yeah. It's pretty amazing. So how do you deal with that? I mean, obviously you mentioned that you don't watch that stuff or read the mainstream media as much, but how do you kind of keep that noise away? Because all you hear is bubble this, recession this, and it tends to be like the bears have a louder voice than the long-term bulls do. They just have it's that, So how do you get that out of your head? Yeah,
they always do. And then, there's also research that shows that pessimists sound smarter. So once you sort of recognize that, there is, for whatever reason, some sort of hardwiring in our DNA that when someone is more pessimistic, to us they sound more credible and smarter than someone who's telling you oh, it'll work out. It's going to be fine.
Yeah.
So we have some inherent bias that way.
Yeah.
And secondly, you mentioned it before, recognizing that a lot of that is entertainment is also somewhat freeing. You realize, a lot of TV personalities are trying to be entertaining. They're not really business owners or analysts. So, that was a little bit of a shot of immunity as well. And I can't emphasize enough that, where you put your focus is, or where you put your attention is critical. I mean, just like that saying, you are what you eat, you are what you pay attention to. If you pay attention to that, it's going to be part of what you take in and process. So you literally just have to block out some and try not to view, to view it.
Yeah. Do you find it's difficult for investors that you speak to kind of take this long-term approach though, and silence the noise?
Absolutely. I think there are a lot of people talk about being long-term investors, but they're not really. I mean, you look at their portfolio and they're turning over quite a bit. And even you read their shareholder letters, they're still very much, worried about nearer term things. You can't just completely bury your head in the sand, but if you're studying the businesses, you talk to them about the things that are going on. I mean, inflation was a big topic last year and every company I followed talked about it. It wasn't like it was just something that was people were talking about on TV and no one was talking about it. This was a real thing that businesses had to deal with. They had to deal with rising costs of raw materials and people. And so you want to, learn how they're dealing with it. And the good businesses found a way. They protected their margins and they get through it.
Yeah. So before we talk about some specific investment ideas that you have, there's something you wrote about in the book that it's something I've loved. This kind of little story for years. The whole coffee can portfolio that Robert Kirby first did in 1984 in Journal Portfolio Management. Can you tell our viewers about that a little bit? Just that theory that he came up with.
Yeah, that's one of my favorite stories too. Kirby came up with this idea because he was a money manager and he had this one woman's account he had been managing for years. And then there's a point where her husband dies and he kind of inherits that portfolio and manages as well. She gives it to him. And he looks at this portfolio and he's astounded to see that, all of these years that the husband had been sort of piggybacking on his ideas in the wife's account, with the one exception is that he never sold anything. So, he had some stocks that were, worth huge amounts of this chunky portfolio. Some of these positions were worthless and one stock was worth more than her entire portfolio was worth. So that was like a big light bulb for him. And he sat down and wrote this article called The Coffee Can Portfolio, which you can find online for free. Definitely would recommend it. And his basic idea was to sort of combat this idea that, we are trade and we're our own worst enemy, that you would put stocks in sort of a coffee can. He gets this from the old West where people would, put their valuables in an old coffee can and bury it or hide it somewhere. And so he kind of analogizes that for investing and saying you should create a portfolio of stocks that you're willing to just kind of put aside and leave alone for 10 years or more. So that was the idea of it. And it's a nice idea. A lot of people have tried real-time coffee can portfolios and they get similar results. It's amazing that's how it works. Of course, if you're going to do that, you have to it depends completely on the wisdom of what you put in. So you got to really be thoughtful about it.
Yeah. You can't just pick, 30 stocks randomly. You have to put thought process. Yeah, exactly.
Put some thought in there. Yeah.
What areas globally are you looking at today?
Yeah. I mean, I have a pretty overweight position in Sweden. People would say I have 3 companies from Sweden. And I still find good companies there that I would love to own. So that's a country probably is not on many people's radars. You think about places to invest. I don't know that Sweden would come up on anybody's list, but it's a good market. And there's an investment report that came out. It was by Jenga Investment Partners, and they looked at all the stocks that had gone up. I think it was 1,000% over the last decade by different countries. And the top countries were ones you would expect. It's like, well, India was number 1 in terms of number of winners. US was there, Japan, China. And then 5th was Sweden, which had produced something like 20 stocks that had gone up at least tenfold, I think it was, over the last decade. And it's even more remarkable when you adjust by population and all that. There's only 10 million Swedes. It's a relatively small market that way. But there's some really great companies there. It wasn't like I, picked Sweden from a top-down point of view. I just was doing the bottoms-up company analysis, found one company in Sweden, started doing more research there. And there was just a lot of really good companies, good corporate governance, And, usually because they're so small, they're internationally focused. So they do business all over Europe, all over the world. And I think it's a great place to fish.
Is there a certain sector, industry that within Sweden, or are they diverse? Those your three.
Well, there's one that they're like Swedish holding companies, so they call them serial acquirers. And there's a number of really good ones. Lifco is one I own. There's also AdTech, Lagerkrans. There's several of them. So they own. You can think of them kind of like little Berkshire Hathaways, but they're only buying private companies. And some of them, they may have certain specific verticals, like Lifco has one dental focus, where they're buying companies that sell all kinds of dental equipment or products, consumables like cement and other things that dentists use. So you can find some that have an industry focus. But what I like about a lot of those companies is their focus on return on capital, which we talked about before. They talk about it. They actually most of them publish a return on capital employed number. And then there's a lot of inside ownership. So a lot of the companies there's either a family or there's there's a lot of skin in the game, which I like as well.
That's interesting. I'd say of all the guests over the years, I don't think anybody, Chris, has brought up Sweden. Such a great country too.
I love visiting, and I've been to Stockholm like twice in the last 6 months, and
wow,
it's become one of my favorite cities to visit. It's a pretty city. I didn't know, but till I got there, but there's just like many islands make up Stockholm. So there's water all over the place, and pretty architecture, good food, and easy to get around. Everyone speaks English, and I've had, and it's relatively small downtown. A lot of you can walk almost anywhere. So
and nice people too. Really, just friendly people. I find, that whole Scandinavian area. Obviously, I'll tell you a quick 30-second story. I've only been there once. It was when the volcano in Iceland, remember, shut down all the airspace. I was the last flight to land in Stockholm. I was coming from Germany, I think, and landed there. I was having a couple of trips on the way, but got stuck there. And I was like, well, it could be worse, right? Stuck in Stockholm.
Yeah, it could be worse.
So
I've yet to be there in the summer. People tell me you should come in the summer because it's beautiful. I've been in the winter, and I was there in March, and there was a snowstorm while I was there. So
oh wow!
But I still loved it. So I still loved it. It's great.
Is there any sectors that you look at, not just anywhere in the world, that they think are nice long-term opportunities at this point?
I don't generally think of it in terms of sectors like that, but just looking at my portfolio, there's certainly, there's a cluster of businesses I own around vertical market software. So this is software that's very specific to an industry. So it might be software that runs a golf course or gas station or hair salons or something like that, very specific. And the beauty of those kind of software products is that once they're installed, they're rarely ever pulled out, so it's like an annuity. And, Constellation Software is the big one there that I have, but they've had a couple spinoffs that I like, and that's definitely a space I follow. I think that's still very attractive, good returns and lots of stuff to do. So, that's one sort of sector I like. And it's recession resistant sort of too, which I like. It's kind of a rugged business that you can own in all kinds of environments. So that's one sector I like.
It's funny you mentioned that because I used to own a Pilates studio, so health and wellness, and we had a software that we went with when I originally opened it, and it was just wonky and it was a big name, but there was other competitors that came up in that time. Try to move the software over. Sounded like a great idea. They sell us on the phone. It'd be it's seamless, right? I will tell you, Chris, the woman who ran it, it took months to finally get all that data over and make it, so the user experience wasn't ruined. What a disaster. So once you're in, people aren't going to change. Right? And software to me is just, you look back in the 90s and really 90s and 2000s, it was probably, if you want to break down a niche sector within technology, probably one of the best performing. I would
Absolutely.
assume,
software businesses are wonderful when you get a good software, like for the reasons we just talked about. You're entrenched in there. It's a very capital light sort of business, and you can sell however many copies, and it's not like there's any more work having 100,000 users versus 1 million users or whatever it is. So that's a lot of really good characteristics. Yeah.
So the hot topic obviously this year has been artificial intelligence, AI. So when you have something like that come across, I'd love to get your thoughts on it. Long term, is this a trend, fad, bubble, et cetera?
Yep.
I'm assuming you probably believe it's going to keep getting bigger. And Then do you have to shift to get some exposure to that? How do you kind of tackle that?
Well, first thing is, this is interesting because I have brought this question up to some companies, and I think it's too early really to know for sure how that's going to affect different things, but companies are thinking about it. So, we mentioned the software companies, for example. How's AI going to affect that? I mean, it could. One of the effects people are talking about is makes coding a lot easier, dramatically lowers your needs for programmers and things. So it could be that your costs go down that way. And another way it could make it easier for competitors to create software. But there's so much that's being thought of. I mean, I know, like, for example, in online gambling world, there's talk about, well, AI will create new ways for people to try to cheat online. But on the flip side, it'll also create new ways to detect cheaters. So it just sort of raises the game for everybody, right? So, I mean, it's going to have an effect. And it's something that I'm talking about and thinking about, but it's very early. Now, as far as getting exposure specifically to it, I haven't thought of it in that way. I think of it more of, well, what's the impact going to be on the businesses I have? I certainly hope, and I'm attentive to the idea that if any business gets impaired because of some AI, but I don't see that yet. Right now, I think it's, there's plenty of opportunities and for almost any company to use the power of AI. I mean, I have a company that's involved in transportation, and they talk about it. AI can be much better about, figuring out routes. And I mean, there's a lot of complex variables and things that go on where you might think, AI and machine learning could impact that. So,
we have stocks in our portfolio, and one of them I'll share is Salesforce. And I've always loved Salesforce. Largest customer relationship management software out there, great leader in my opinion. And you're seeing it doing very well recently because you think about customer relationship management software. If you sprinkle a little AI in there, how much better that could improve that if they did it the right way. And I started looking at other companies, and it's pretty amazing. We went through our portfolio not too long ago, how AI is either being incorporated with the companies or could hurt these companies. Because again, like there's different ways. And you really have to consider it. It's something you can't ignore.
I think so. And, like I said, the businesses I've talked to, they're talking about it. They're thinking about it. So it's not like this is just something that's like fad or just hanging out there. And this is something real. I think companies are talking about it. It's going to have an effect. And I'll be really curious to see how it plays out. Probably in ways we can't imagine now. I mean, it's just like,
That's the thing. I keep telling people, and they're always, when people know you're in the stock market and you go down to the pool bar here for happy hour to watch the sunset, and people are like, oh, what's healthcare going to look like in 10 years? Yeah. I don't know. I'm not a doctor. And I got to tell you, nobody knows. It's going to be so different in 10 years. You can't imagine what it's going to be like. Your experience walking into a hospital or a doctor in 10 years from now, in my opinion, healthcare is one of those, the one sector that's going to be completely upended. It needs to be, in my opinion.
I agree.
We don't know. We can't even see it.
I know several doctor friends, and they're involved in different startups and doing interesting things. And there's some mind-blowing things. The way visits are handled, the way, there's super apps being developed. You can handle everything, all your medical needs on an app, whether ordering refills or prescriptions or doctor appointments. So there's a lot, I think, that's potential.
Yeah. I mean, it's, to me, there's that study out there that you ask people, obviously to think about themselves, and it lights up here. Ask them to think about somebody else, that doesn't light up. You ask them to think about themselves in the future, it doesn't light up. And then you ask them questions, and most people are very negative, right? They just, for some reason, they're negative on the future. They can't picture it. And I don't know, maybe I'm just naive, but I'm a bit of an optimist. You only live life once, so let's hope for the best, right?
I just think about, just think about people. I mean, there's so many, I'm sure too, just a lot of talented people out there, and they're going to figure out these problems, and they're going to create businesses around it. And so, I tend to be more optimistic because, again, I'm closer to those people, those entrepreneurs, and what they're doing. And I get excited when I start hearing their plans. Yeah.
And you think about, but again, it goes back to the media we talked about earlier. If you turn on the media, they're not going to say, "Oh, you know what? We had a pretty damn good day."
Yeah, nobody's going to say that, right? No, that doesn't sell.
It doesn't sell. So before I let you go, Chris, I always ask every guest, and you can answer if you want to, the island question. So basically, I send you, your family, your friends, whoever you want to take to an island for the next 10 years. What's the one investment? It doesn't have to be a specific stock, or it could be an area, asset class, whatever. That one investment you feel really comfortable buying it, walking away, and coming back in 10 years?
Yeah. Yeah. That's great. That's a great question. I mean, I think immediately of my portfolio. Of course, I wish I wish if I could, I take the whole thing.
Yeah.
But let's see, if I had to pick one stock, I'll say Constellation Software is one I feel totally comfortable leaving that alone for the next 10 years. Not only the economics of the business great, but they're wonderful team of capital allocators there, and I'm sure they'll come up with a lot of interesting things to do. I know there's more spinoffs coming, so I think that will be a pleasant surprise at the end of 10. Maybe not surprise because I'm bullish on it, but I think it will be a good performer.
How big is that company now?
It's probably about $40 billion. Another reason why I pick it, it's got a lot of different businesses in it, and it's hard to imagine it being any kind of magic bullet out there that could impair it. So it's very resilient and diversified that way. And so, that's an important consideration.
Oh, that's a great idea. I mean, we get a lot of the Bitcoin a lot for some reason, gold, which I'm not a fan of gold. We get a lot of gold. So it's nice to see somebody actually pick a stock, because a lot of people, even though this will be archived, but so in 10 years, I will come back and we'll grade you and see how you've done.
I still own it. Yeah.
Yeah, exactly. But hey, man, I want to say, again, the book is one of my favorite top 10 books in investing I've ever read in the last
Thank you, Matt. Appreciate
47 years of my life. So I thought it was well written. So keep up the great work. And hopefully one day I can buy you Tonya down here.
That'd be great. I remember those Tonyas. That's great. Awesome. Well, good being on with you. Thanks for having me on. Great questions and a fun conversation.
All right. Thanks a lot, Chris. Take care, buddy.
All right. Bye-bye.
Opinions expressed on this program are solely those of the contributor and do not necessarily reflect the opinions of Stansberry Research, its parent company, or affiliates.